Events after the reporting date, IAS 10. IAS 10 deals with events after the reporting date. So what exactly events after the reporting date? Events after the reporting date are those events which incurred between the reporting date. Let's assume that our reporting date is 31st December 2018 and the date on which financial statements are authorized for issue. That is the authorization date. Let's assume that it's 31st March 2019. So events after the reporting date are those events that incurred in between these two dates. So if any event incurred on these between these two dates, whether it's an unfavorable event or it's a favorable event, we have to consider that as per IAS 10. Then what to do with this event that falls within these two dates? We can classify such events as either the adjusting events or non-adjusting events. It might be adjusting events as well as non-adjusting events. If such event is being classified as adjusting event, then this is to be recorded at 31st December 2018, that is the reporting date. Although we have received information after the reporting date, but such information is being connected with the reporting date, so that is to be adjusted. An accounting entry has to be made, an expense, income or asset or liability is to be adjusted. But as far as the non-adjusting event are considered, we will check that whether this information is material or immaterial in nature. The information is significant or information is insignificant. If information is material, then only a disclosure is required in the notes to the account. No accounting is being required. But as far as the immaterial non-adjusting event is concerned, no disclosure is needed. You don't need to provide any kind of disclosure to the stakeholders. So let's discuss few example of adjusting events. Following might be adjusting events. For example, a court case decision. A court case was pending at reporting date. An accounting treatment has been decided on the basis of the probabilities, but now the court decision has been finalized, so that becomes an adjusting event. Fall of net realizable value. An inventory rule, we know that inventory rule is that lower of cost in NRV. So if an inventory item is being recorded at cost, but afterwards you know that the inventory NRV is less than cost, then you have to make an adjustment. And similarly, information about a customer, that becomes bankrupt. So if a receivable is being booked at reporting date and further we know that a customer has been bankrupt, then we have to record a bad debt against this customer. But as far as the non-adjusting events are concerned, let me give you some example of non-adjusting events too. For example, issuance of ordinary shares after the reporting date, some news about merger and acquisitions, fall in the value of investment, asset or inventory destroyed by fire, Similarly, dividend declared after the reporting date. So if dividend is being declared after the reporting date, it will not be considered as a liability in the current reporting year. It will be a liability in the year 2019 rather than in the year 2018. Similarly, if you get any information about the going concern status of the business, then you have to adjust at the reporting date. So this considered as adjusting event. So what is exactly the adjusting event? An adjusting event is that about which exists, for which condition exists at reporting date. So an adjusting event is one for which condition exists at reporting date and further information is being received post reporting date. So you need to adjust that phenomena at 31st December.